Welcome to the Share Talk interview, the latest one, and it's the biggest and the best so far. We've got Koot, who is the executive chairman of LGO Energy, a company which is famous around the small cap world. What attracted you to taking on this role?
First, let me interrupt you. LGO to be renamed into Columbus Energy Resources.
I was going to get onto that.
Beat you to it. What attracted me to this business? I've done a lot of stuff during my career, but LGO has got the attraction that it's got robust core assets in Trinidad, which I believe can generate free cash flow, and with that free cash flow we can then build a very exciting exploration portfolio. So that's the crux of it. That's what I see in the business.
Right. I mean, this company. I mean, I think 5 years ago, I first got into charting small caps from the old Lenny gas and oil, and at that time it was supposed to be the next great thing. It's been quite a long wait. Private investors are very impatient, very fickle. They like to see results, and in a way also, if you disappoint them, they don't normally come back to the same company again. Clearly, you think there's potential here. How much potential is there, and also how much will it cost to get to that state of releasing value?
There's a lot in that question. I'm here. This is a clean break. So from here, we're going to build the company into something great. But learning from the past, if you go through the period 2013, 14, 15, you can see from what the previous management team did is they were able to build up production very quickly. Certainly during 2015, they peaked close to 1,000 barrels a day and even more. So what that shows me is that the underlying fields have got the potential to build up to that production. I believe the company is opportunity rich and cash constrained. So that's why this tiered approach, first build up the production within the existing asset base. And to do that quickly, we are tomorrow, in fact, Stuart Ahmed, he is my specialist in reservoir optimization and production optimization. He's flying over to Trinidad and he's going to be there initially for a month, but the plan is for him to be long-term in Trinidad to build up this robust underlying production story so that with that baseline we can then build out the company to something great.
Right, so this is no longer a jam tomorrow company. This is a company where there's jam coming out of the ground today. You're going to use that cash, or the cash that comes from that flow, in order to then expand the business at a later date. Is that
exactly. Right? So it's a change focus. So I had looked at many other opportunities, and I walked away from exploration-only companies because exploration-only companies, they have to talk up their exploration assets to be able to generate value within the business, and they're always under the time pressure. They've got a gun to the head to be telling a good story. So that's why I think it's important, and that's what gives the opportunity. This underlying asset base, which has production. We've got 3 fields in there which produce.
Do you think, I mean, this seems to be a bit of a trend around the AIM market or the small caps market for companies to actually not get into the limelight until they're actually producing, not saying that we've got an asset which in 3 years' time, if you give us X amount of money, you might get a return on your money. It's actually people want to see producing companies rather than invest in companies which haven't, which are just a hole in the ground, let's say.
And I think that's correct. The 2013 recession, energy recession, obviously has had a lot of impact on the industry, and people now realize that you need to be slightly more conservative in your approach to creating value within the energy industry.
And what's the goal here? I mean, what's the goal and what's the time frame from this point?
We're talking about a 3-year strategy. So the first year, it's all about focus on getting the extra production from the existing assets. During that first year, we will start building our exploration portfolio, particularly around the southwest peninsula acreage we already have. And then we're going to expand our horizon in year 3 into South America.
Right, just tell us about Trinidad, and then maybe you can tell us about South America. But Trinidad, is it a major field? Is it minor? What's the scale there? And is there more opportunity for you to expand in there, or what is that?
The Venezuelan basin, which Trinidad is part of, is one of the largest oil field basins in the world, and not a lot of people realize that. So if you drill a hole in the ground in Trinidad, oil will come out. It's just how much you're able to produce and for how long. So that's the question. So the underlying the charge system is there, and that's what makes Trinidad so exciting place to be.
Well, then let me turn it around. Let's say, well, why has it been so difficult with LGO? Why has it taken so long? If you can basically just find, the stuff's everywhere.
Yeah, and then we'll go into the history of LGO, and I will give you this question. So why has it been so difficult? LGO has always been opportunity-rich, cash-constrained, and as a result, it's been difficult to prioritize what's going to give the biggest bang for the buck. So they were driven by promises to shareholders. They were driven by banks. So other people often were in charge than the leadership team itself. So we're taking a step back. We are going from a robust petroleum engineering basis, build up the portfolio to where we believe we build sustainable production, and based on that sustainable production, we can then have the transformational growth.
Okay, so you mentioned that you're thinking of expanding once everything's sorted out here. You don't want to try and run before you can walk.
Yeah.
You would go into South America, which has potential as well.
Yeah, the skills we will be building up over the coming 3 years is focused on low-cost operations, land-based oil, and that skill, that core skill, which we anticipate to build, is very exportable to all of the South American peninsula.
Right.
And very close. It's very important that in this oil price environment, you have got a low-cost operating base, which we obviously have.
So what is that? Is it $30, $20?
No, our pure lifting cost is below 10.
Right.
Yeah.
So you're not dependent. You're not sort of shaking or sneezing every time the oil price goes back to 45 or up to 50. Or
the oil production is fundamentally profitable. We have so that's an important step. We just need more to be able to sustain the business.
Right, and just the general, I mean, I may have sort of mentioned it in passing, but the Saudis and the Russians, gang together to come up with production cuts going into next year. How much are you affected by economic or other OPEC activities?
Any operator and anyone who's dependent on oil price obviously is sensitive to oil price. With us, no different. But we will run our economics, and we will create our biggest bang for our buck, planning an oil price somewhere between $45 and $55 per barrel. We believe that if we sanction the project at that level, we will be robust for the long term.
Okay, well, Leo Koot, Executive Chairman of LGO, soon to be changed into Columbus Resources. Thank you very much for joining us today.
Thank you very much, Zak.